Hello, and welcome to this webinar on Bitcoin mining and the future of digital finance. I'm Diane Season, Marketing Communications Manager at Evolve ETFs. Before we do get started, though, let's just get through some housekeeping items. So this presentation should last approximately 40 minutes, followed by some Q&A. And if you have a question, simply type it into the chat, and we will get to it towards the end of the presentation. Now that's out of the way, let me introduce you to our speakers today. We are joined today by Elliot Johnson. Elliot is Chief Investment Officer and Chief Operating Officer at Evolve ETFs. Prior to joining Evolve ETFs, he was Senior Vice President, Retail Markets at Fiera Capital Corporation, a prominent Canadian investment management firm. Prior to this role, he did serve as Chief Operating Officer of Fiera Quantum Limited Partnership, an alternative investment manager. And we are also joined by Sue, Vice President of Corporate Development at Hut 8 Mining. Sue is a chartered investment manager, emerging technology and innovation champion, advisor, and business building technologist. Whew, that's a lot. Prior to Hut 8, Sue worked with both startups and scale-ups in the blockchain and cryptocurrency space. And prior to working in crypto, Sue spent a decade in the financial services and fintech space, working with financial services firms, institutional asset managers, and technology companies. Over to you, Sue.
Hi, thrilled to be here today. So there's lots to cover, but before we get into anything, I'm just going to give a quick overview of who Hut 8 is. So we are one of the oldest and largest digital asset miners, publicly traded digital asset miners in the world. We trade on the TSX and on the NASDAQ. And what's really unique about us is that we've been pioneering digital asset mining since about 2018 versus in this most recent crypto bull market of 2021. We saw about 16 new entrants come to the space. Hut 8 is, but we've been around for quite a while, which also means that this isn't our first bear market. And because we've been through and survived and thrived in past bear markets, we really take a balance sheet first approach to everything that we do. Another thing about Hut 8 is we have an incredibly diversified business profile. So we've got multiple lines of business and uncorrelated return strategies with upside potential that we'll certainly get into. We also recently complemented our operations by buying a highly diversified technology platform, data centers, which again, we'll get into, with steady cash flow, strong positions across infrastructure, connectivity, and storage end markets. Significant holdings. So Hut 8, we also have one of the largest holdings of Bitcoin on our balance sheet globally. Last time we reported, it was about 7,400 Bitcoin on our balance sheet. And really what's also really interesting about Hut 8 is our experienced management team. So we've got a real experienced management team with a proven track record of success in data infrastructure transformation mandates, M&A, digital assets, regulation, and blockchain. Elliot, over to you.
Thanks, Sue. Hi, everyone. Thanks for joining us today. It's great to chat with you about cryptocurrencies, Bitcoin in particular, and to join Sue on this joint webinar together to talk about the future opportunities for Bitcoin. Just before we get into that, very quick business update from Evolve. We've actually grown to 2.1 billion since September of 2017 across 22 different ETFs. We're probably best known for disruptive innovation within the Canadian ETF market, covering subjects such as automotive innovation, cybersecurity, data centers, and video game investing. Most recently in that lineup, we launched Mesh, which is our metaverse ETF back in the fall of last year. We also have a fairly large amount of clients using our equity income with covered call products. There are 3 relating to financials, bank, e-bank, and call, as well as we have materials and mining with base, healthcare with life, and future innovation with lead. On the innovation front, we of course have brought cryptocurrencies to the ETF market with EBIT, our Bitcoin ETF, that we'll be talking a lot more about in this presentation, Ether, our Ethereum ETF, and ETC, which is the first multi-crypto ETF that holds both EBIT and Ether in the same single ticket turnkey solution. And then most recently, and certainly this year, people have been struggling with fixed income and a lot of more interest in our high interest savings account ETF, HISA, which is paying close to 2% at this point now after all the rate increases with the Bank of Canada. This is daily liquid cash deposits at 4 of the big 6 Canadian banks. So that's a bit of an update. If you want any more information about our product line, please reach out to me, reach out to one of our sales folks, or go to our website where we have lots of additional information on these strategies. So let's talk about Bitcoin. That's why we're here today. What I wanted to do was set the stage for why we view Bitcoin as a particularly attractive investment for people, especially now at this stage of the cycle, and then be able to pass the conversation over to Sue to get into more of the detail around how Bitcoin looks from the standpoint of a miner and some of the industry details that we often don't get to see a lot from the outside. So starting from a macro perspective, I don't want to spend too much time on the negative things in the world. I think anybody can open a newspaper and hear a lot of negative news, but nonetheless, it's been a challenging time for investors, especially this year. Really, this comes back to a whole variety of factors, but at a very high level, if you look at the very long term, we're at the end of a long-term credit cycle. And at the end of long-term credit cycles, you tend to have things like inflation, because essentially it becomes a monetization of the large amount of debt that's accumulated in the system over the past several decades. Right now, global debt to GDP is about 4 times, or 400%. And so as a result of very low interest rates and very high debt levels, central banks are struggling between, do they raise interest rates to try to deal with inflation, but then governments can't service their debt, companies can't service their debt? Do they cause a recession to deal with this, which of course has a lot of negative consequences? And this is causing it to be a very difficult place for investors to be, because I think we're all feeling the bite of inflation, and everybody's wondering just how much value is there in my cash when I have cash? What's happening with that? Which is again why people are looking for high interest on their cash, but also looking for alternatives to cash, and in particular alternatives to bonds that have had a very difficult time this year. There are, of course, layered on top of that, geopolitical risks, the pandemic being the one that has affected each and every person here today. But also we see now war in Europe again, and there are all kinds of problems around Russian sanctions and Europe's energy insecurity. And then beyond the geopolitics of that, we have seen inflation, food shortage riots, anti-lockdown protests sweeping around the world. So we have a time of really uncertainty, the likes of which most of us haven't seen in our lives to this point. And then we saw it in Canada with the trucker protest. We've seen it with the sanctions relating to Russia. There's been a weaponization of the financial system by governments that previously hadn't taken these steps before, in terms of freezing bank accounts of protesters, in terms of freezing country bank accounts and foreign reserves in the case of the war in Europe. All of this has led to one conclusion, regardless of how you may feel about these individual issues. And that conclusion is that government securities are no longer risk-free in the same way that they used to be. There's now confiscation and sanction risk. That risk gets priced into the asset class and becomes something that investors become aware of from a pricing perspective. This is driving people to safe havens. People talk a lot about gold. And then we are very lucky in this time in the cycle because we have an alternative to gold that's actually built for the internet age, and that's Bitcoin. And so this all leads to the big question of why invest in cryptocurrencies. It's because for the first time ever, we have digital scarcity for a digital asset that's layered on top of a global internet and can move at the speed of light. It's not owned by anybody, it's decentralized, and doesn't require anybody's permission to operate. And so this is really a solution for the challenges that we have, as I'll get into over the course of the next few slides. So I'm going to run through a few charts just to kind of reinforce some of the points that I've made. I don't think I need to spend as much time on inflation as we used to when we talked about this a year ago, because I think everybody feels it. But nonetheless, we are at 40-year highs. And just to point out one thing, the last time we were over these highs on the left-hand side of this chart, they actually were using a different metric to calculate inflation, which if you were using it today would actually mean that we're at highs that even exceed those peaks. And so inflation is a clear problem for everybody. It's a kitchen table issue. I'm sure it's an issue that advisors are dealing with, talking about with their clients, and it's something that we're all concerned about. So the question, of course, where do you go in volatility? If we move to the next slide, the problem is that bonds no longer do what they used to do in terms of dealing with volatility, because it's the end of a long-term credit cycle. And we see money leaving the bond market due to yields rising and the price of bonds dropping. And again, this is why people who are staying in fixed income are moving to much shorter duration. In the case of a lot of folks, they're moving to high income cash ETFs like our HISA product. The bond market is continuing to be a place where there are a lot of more questions than answers. If we move to the next slide, you can see that the US yield curve, this is the 2-year versus the 10-year, has inverted. This is usually something that forecasts a recession. And essentially what this means is that people are actually paying less to loan money to the government for 10 years than they are for 2 years, which is, of course, unusual given that you're lending it for a longer period of time. And that's because people are actually expecting there to be a recession, and they're expecting the central banks to have to react, perhaps by more quantitative easing, more money printing, balance sheet expansion, and effectively a change again in the cost of money. And so all of these things are challenges for the traditional 60-40 portfolio. They're the challenges for the folks who are looking for a place to store their value. What do you do when you earn $1 today and you want to pass it on perhaps to your kids 20 years from now? How do you retain the value of that dollar? How do you put it in a long-term store of value? How do you transfer it around the world without dealing with intermediaries who are going to take large fees? All of these are the questions that people around the world are asking today. And so that's why investors are looking to new solutions. And this is really what Bitcoin was designed for. It was designed in the wake of the 2007 Great Financial Crisis as a way to provide a digital store of value that can be transmitted as fast as the internet can transmit information. And so we are looking at this with great excitement for that. But the other reason that we look at Bitcoin and we're so excited is because it also demonstrates a characteristic we have seen with technology growth companies for the past 20 years. And that is that the value is a function of the size of the network. It will gain in value with an increase in adoption. So if we go to the next slide, this is a bit of a graphic to tell the story, but the key feature here, for those of you who are familiar, is Metcalfe's law. So Metcalfe's law, it's this law of how do you value a network? And it essentially says that the value of a network is the function of participants in the network. So if you imagine the very first telephone was useless because there wasn't another phone to call. Once there were 2 telephones, well, those were useful to call each other. But a telephone today is far more useful than those because everybody in the world has a phone. So if you have a phone, you can talk to anybody else. The value of the network relates to how many people are connected into it. We've seen this in the past 25 years when it comes to high growth technology companies, particularly if you look at things like social media, which they themselves are really predicated on the strength and size of their network. Facebook and Twitter being the most obvious examples, but it's really true for any company with a network effect. You know, Facebook was useful and gained adoption when you saw that your friends were on it and when your family was on it and you were able to post a photo, perhaps of your family, and then have your family react to it and so forth. And so that's what we've seen in terms of technology. This is just always the case because the more adoption there is, the better it becomes for everybody. And it also answers that question. We get this question all the time. What happens about when there's another Bitcoin? Why can't there be another Bitcoin that's better than the current Bitcoin? And this is really the answer to that question. Bitcoin is the winner of the race because it has achieved adoption to the point where no other contender that does this specific thing of providing digital scarcity really has a chance to achieve this same status. The status is really cemented in by the fact that it's legal tender in a country, El Salvador. It's in regulated investment products like our EBIT ETF. It has survived many market cycles. The number of users on the network continues to grow steadily. The number of users on the Lightning Network, which is for small Bitcoin payments, continues to grow steadily. And so when you see growth of the network continuing to happen, and it's decentralized and nobody's in control, you know that it's here to stay. And it's the best analogy I have heard for it is that it's like email. Nobody controls email, but we all use email. And email itself, if it were a product or a company, would be enormously valuable. And that's one of the ways in which you can look at Bitcoin. And so it's this combination of network effects and digital scarcity that drive value in Bitcoin and really represent the opportunity. So the question, of course, as an investor is, so what is the opportunity? Like, how do I size this? How do I look at this compared to the rest of my portfolio? Just to pull up one slide that we built, I think mostly because I like looking at those kinds of charts that show the size of the universe. The big circle here is global equities, and the tiny little speck on the left-hand side is Bitcoin. And so you can see right now, Bitcoin is about a quarter of the size. It would have to grow by about 40 times to get to the size of gold, and then vastly bigger to get to the size of global equities. And so the opportunity here as Bitcoin becomes more widely adopted by institutions, which is going to come with more regulatory clarity. And again, adoption is a self-reinforcing cycle. Shows you just how big some of the opportunity is just to get a small fraction of the investment landscape, let alone become predominant. So that's our macro big picture of the investment opportunity for Bitcoin and why investors need to think about it as an asset class. And so with that, I'll pass it back to Sue to talk a bit more about Bitcoin mining and how miners relate to the asset itself.
Just to piggyback first off of a couple things that Elliot said, it's interesting to watch how Bitcoin behaved versus gold last week after the CPI readings came out. So I think gold caught a bit of about 1.8%, but Bitcoin was up actually 6.15%. So it is really interesting to see, number one, how Bitcoin is reacting and potentially even playing into this narrative of the store of value, the hedge against inflation of the future. So we love to see it. But yeah, let's get into Bitcoin mining. And its significance to the space. I think you could sort of liken the Bitcoin mining role in the Bitcoin miner role in the entire network as sort of like the Fed, in the sense that we are the minters of this currency, of this reserve asset. So let's get to the next slide to talk a little bit about what that looks like. I think before we do that, though, I will go into what's really unique about Hut 8 as one of the largest and oldest Bitcoin miners in the space. And that certainly is our CEO, Jamie Leverton. So Jamie Leverton is one of the most famous women in data infrastructure transformation mandates. So she's the gal that companies like IBM, BlackBerry, Cogeco have called in over the past 20 years when there's a data infrastructure that's in need of transformation or to become ready for sale. And the reason that this is significant is because Jamie takes a real operator lens and a unique view as to how to continue to grow as an infrastructure operator, aka a Bitcoin miner at the end of the day, because Bitcoin mining really is just data infrastructure and the output is Bitcoin instead of high performance compute. So yeah, that's what's very unique about the Hut 8 and our leader here, Jamie Leverton. Let's go to the next slide. Okay, so a couple of growth engines for Hut 8. Number one, as I've mentioned, we're one of the oldest miners of digital assets in Bitcoin. Number two, we've got a tremendous stack of Bitcoin, over 7,400 on our balance sheet, that we did have involved in some yield programs. So we were earning yield on top of that Bitcoin. And we are looking at other cases, like, for example, becoming potentially one of the largest Lightning node operators in the world, which Elliot referred to earlier as showing incredible amounts of adoption on the Lightning Network, and also the growth of our high-performance computing infrastructure services as not only a complement to our existing mining operations, but also a way that we see that we can support the growth of the blockchain digital asset Web 3.0 industry. Next slide. So Hut 8, we've got a really unique portfolio of data infrastructure assets. So at our core, we are Bitcoin miners. We have Bitcoin mining operations. But as I mentioned earlier, in January of this year, we actually bought 5 data infrastructure assets off the publicly traded company called TerraGo in January. And so this effectively has now meant that we have a full Tier 0 to Tier 3 high-performance computing platform. So what does that mean? It means from an infrastructure perspective, we can not only mine and hold Bitcoin and continue to contribute to the industry as minters of Bitcoin, Bitcoin, of new and fresh Bitcoins being added into circulation. But we now also have the infrastructure to support the growth in the high performance computing, the Web 3.0, modernized cloud, blockchain storage, gaming, both traditional and blockchain, and special effects and render industries. So let's go into the two pieces of our business. The first one is the digital asset side of our business, and then the next one is the data infrastructure side of our business that I'll go into next. So Hut 8, our two main mining sites are in Alberta, and then our third mining site is actually in North Bay, Ontario. So we've got an incredibly diversified fleet of mining equipment, which again also can help us expand into alternative forms of revenue, compute, and flexible load computing businesses. We've got, as I mentioned, we've got an ability to leverage the Bitcoin stack to build an additional lines of revenue. We currently have 1% of the total Bitcoin network hash rate, and that capture of hash rate, that growth of hash rate continues to grow for us. Our current capacity is about 129 megawatts, and our future capacity is about 209 megawatts. And we also have a third mining site going up in North Bay at incredibly competitive energy prices of 2.7 cents Canadian per kilowatt hour. As we'll talk about later on in this presentation, the lowest cost of energy is very important for miners because we are highly incentivized, again, to find that lowest cost of energy because it is the number one sort of driver in our business beyond actually having the equipment. And as I mentioned earlier, because we've been we're one of the oldest miners in this space, and this is not our first bear market, this is actually our second bear market. We've learned from the first one and accordingly take a balance sheet first approach to everything that we do in our business. And accordingly, this has meant that relative to our competitor profile, to our peer group, we have one of the lowest debt and debt to equity ratios of our competitor group. So now let's get into the data center side of our business, which we're really excited about. So this is 5 data centers that we bought in January. And our current enterprise customer profile here is government, media and entertainment, and financial services companies. So basically it's 36,000 square feet of geodiverse data center space, 400 existing enterprise customers that came with this deal, 19 million in trailing revenue as of last year, 2021. But most importantly, we've got a complete selection now of composable infrastructure and scalable cloud services, and a platform of applications and services to serve what we see as the underserved markets and customers in the growing digital asset, blockchain, gaming, and Web 3.0 industries. And another thing is we've got a direct sales team that's now not only growing our customer profile and our customer base in the traditional high performance computing space, but also our customer base in the Web3 space. And if ultimately Hut 8, we see ourselves as the infrastructure bridge between Web2, Web3, the digital asset, blockchain gaming space, and blockchain space. And effectively, as I said earlier, we look at ourselves as really like a full service high performance compute platform. I think, there's a lot of misinformation in the media, and I actually hope that we get into it in the Q&A about just how pollutive Bitcoin mining is for the industry. It's incredibly misguided FUD that is out there right now, but we can get into that hopefully later. So it does bear to mention that ESG and thinking about the environment as not only a shareholder, but a stakeholder in our business is part of our DNA. So for example, we are focused on being completely carbon neutral by 2025. And in terms of how we look at carbon neutrality, we do use carbon credits, but we have a very intense carbon credit due diligence process. So we look at things like, is the project green? Is there reliable data? How near term are the credits? We're also very focused on the S and the G of ESG. So things like maintaining an executive management team gender diversity of over 40% women, at least 30% board diversity and transparent governance on our board. And we're also very pro partnering with renewable energy advocacy groups, blockchain legislation lobbying as well. We're friends with regulators and politicians on both sides of the aisle, north and south of the border. We're also one of the founders of the Bitcoin Mining Council. And again, really being an advocate and an educator as to the realities and the benefits of this technology in not only, obviously the blockchain and digital asset space and the investment space, but also really the energy space is a huge priority for us. Okay, so let's get into how a Bitcoin transaction works. My guess is a lot of you guys probably already know about this, but let's just get into it high level. So how this works is someone will request a transaction on the Bitcoin network. This transaction is then broadcasted to peer-to-peer computers, aka nodes on the network. Miners, such as a Hut 8, would then verify that transaction. The transaction is then combined to form a data block, and that new block of data, once it's confirmed, is added to the blockchain. And this is all done in real time on the public bulletin board that is the open and decentralized Bitcoin network. And once this is complete, once that block has been added, the transaction is complete and the process continues. And so what is the difference between, or like, let's get into what is mining versus what is a miner. So mining is the system that adds what we just talked about, transactions, and provides security to the Bitcoin blockchain. And it's how new Bitcoins enter the market, which is why sometimes you can think about Bitcoin miners as sort of like the Fed or the minters of additional currency in circulation. And a miner is the actual computer designed to solve the mathematical algorithm, aka the Bitcoin code. So for example, in gold mining, you obviously have, pickaxes and hard hats in, large machines. But in Bitcoin mining, you have computers and high amounts of energy solving mathematical algorithms in order for new Bitcoins to come to the network.
Thanks, Sue. That was great. Maybe I could speak a little bit on some of the supply dynamics we have, and then I actually would like to chat a little bit about Lightning with you if we could as well after that. So one of the unique things about Bitcoin makes it different from other financial assets is that you can actually see on the blockchain who owns every single Bitcoin out there. This is different from traditional equity analysis where you can see price and volume, but you really can't see who bought and who sold. And so it's very much more difficult to figure out what's going on. But there are a number of people who do amazing reporting on what's called on-chain analytics. And one of the metrics that we look at very closely is how are long-term holders responding to the changes in price over the past year or several years. And so this chart here shows something that we've noticed in the past few months, and that is that we're at an almost all-time high in terms of long-term holders. So long-term holders are defined as addresses on the Bitcoin network that have a history of not selling their Bitcoin. So these are addresses where they haven't sold in over a year. That means they've been through 3 different major price corrections and they're still holding their Bitcoins that they bought over a year ago. And so this is a very important way in which you can tell the difference between long-term Bitcoin holders who have conviction about what's happening in Bitcoin, have spent a lot of time learning about Bitcoin, understanding the value, the utility of Bitcoin, and have a view of the long-term value and believe that this is going to be something that's maybe worth a lot more in the future. They've been buying, accumulating, and not selling Bitcoin. And the folks they've been buying from over the past year have been people who bought more recently, perhaps people who were just chasing the price back in the first half of 2021. And then when the price dropped, they said, that's it, I'm out. I don't really care about Bitcoin. I don't care about the mission of digital finance. And I was just in it for speculative gains. And so this is a very interesting metric because we are at a point, and this is just one of several metrics that would suggest this, where you have a strong amount of conviction among the supply in the market, and those who are less convicted have left. And that typically is something that happens before we see then, and it doesn't mean it's going to happen tomorrow, but it typically happens before then another rally to the upside. And the last time we were at these levels was September 2020, which, if you look back at the price of Bitcoin, would have been a great time to buy if you'd been watching these metrics back then. One thing that happened this year was, again, just another view on adoption. The Bitcoin Miami conference is the largest Bitcoin conference in the world. It took place back in April. And this year, in fact, they had to move to a bigger venue. So they used the Miami Convention Center. It was an absolutely massive event with tens of thousands of people attending. 3 different main stages focused on everything from technology to products to people who were there to talk about hard money, inflation, and central banking. And it was an amazing event. And they even unveiled a bull that will be a permanent fixture in front of the Miami Convention Center because Miami wants to be one of the Bitcoin capitals of the world. And this is similar to the Wall Street Bull, famously in New York. in the financial district. And so the Bitcoin conference was full of lots of announcements, and something that I recommend people, if you're interested, go back into YouTube and watch some of the videos from that conference. There are really some great presentations there. I just want to dive into one which really jumped out at us, and this was the keynote from Jack Mallers toward the end of the conference. So Jack Mallers is the CEO of a company called Strike, and Strike makes an app for the phone that focuses on Bitcoin Lightning payments. And he announced a year ago in 2020 that he was working with the government of El Salvador to help them bring Bitcoin into existence as a legal tender within the country of El Salvador. This year, I think the announcement was maybe an even bigger excitement for the crowd, because he announced that he was partnering with point of sale terminals as well as Shopify to allow people to use Bitcoin on the Lightning Network to pay for transactions. And so by the end of the year, half of US retailers will accept Bitcoin, and Shopify will as well. And this is something where the retailer themselves doesn't necessarily need to know that that's happening, because Stripe takes care of the back end, but it means you'd be able to walk into a lot of stores in the US with your Lightning wallet with Bitcoin in it and buy goods from that store. And so for us, this is the kind of missing piece that's often criticized. Well, what am I going to do with my Bitcoin? I can't buy anything with it. We don't think that that's going to be true very much longer in a lot of places. But Sue, I wanted to ask, because you mentioned that HUD 8 is also working with Lightning. Where do you see the Lightning adoption growth happening? And are there natural advantages as the Lightning Network? I believe the last chart I saw was that we had all-time high adoption for Lightning. What does that mean from a mining perspective, and where do you see mining going over the next 12 months?
Right. So HUD 8, we're not working with the Lightning Network yet, but in terms of how we would potentially put that stack that we have to work, being a Lightning node operator, we're certainly in a great position to potentially use that as another sort of form of revenue and business and just market participation. In terms of, where miners will be, even if you look at post the next halving, which is May 2024, there's always going to be a need for miners to be verifying transactions on the network, because Lightning Network is a faster and cheaper peer-to-peer, but ultimately they do eventually settle on the Bitcoin network. So there's always going to still be a need for miners. In terms of the next 12 months, though, I think it will be really interesting to see what happens in the mining industry, because right now we are pretty much fully correlated with high growth and tech stocks. And so we are subject to the same macroeconomic factors that are happening right now in the tech space, and really generally in a lot of different industry. But I think once Bitcoin catches its bid again, which we do certainly think, that it is going to be back to incredible profit margins for miners. Although most miners are still profitable right now, because, for example, we do mine, at least for HUD 8, our cost per coin is about 18,000 Canadian per coin. And actually about 15% of our monthly production does come in at less than $4,000 Canadian, because we do have a strategy where we mine ETH but get paid out in Bitcoin. So I think, once we see Bitcoin, this bull run come back in, and as you've shown, Elliot, there really are some very strong indicators that we are going to see some major upside and movement in price action in this asset class. You should see a bid for miners. And then, it's incredible. I was at Bitcoin Miami 2022, and it was awesome to see this announcement. And again, it's not just Strike that's partnering with Shopify. You also have players like Visa, MasterCard providing crypto rails. They're not necessarily partnering on the Lightning Network, but they're still providing the rails that, again, facilitates adoption, which is awesome. And actually, me personally, one thing, just to go on a little bit of a tangent here, that I loved and was very interesting to see. So I've been in this industry since late 2016, early 2017. And it was very interesting to see the amount of players like JP Morgan, Morgan Stanley, the Goldman Sachs analysts of the world at the conference, wanting to have meetings, wanting to talk about, the growth of product, wanting to talk about, again, how they can play a little bit more into this industry as well and provide their investors with more avenues to invest in this industry. So it's really interesting to see how the industry has evolved and sort of who's paying attention now versus, again, in 2019, 2018. So.
Yeah, I think that's exactly it. And I think, especially when you talk about Visa and MasterCard and some of those payment companies, that it shows to the extent, that Bitcoin mining is the word mining doesn't do justice to the amount of actual infrastructure that's going on there. And this is replacing financial services infrastructure right now that's dealing with just debit and credit balances around the world. But we're actually dealing with an immutable blockchain that requires a totally different skill set and technology set.
Yeah, it's
I think
effectively
it's
triple entry accounting, right?
right. And you need to be specialized to do it. You know, it's not something that existing payment companies are just going to suddenly figure out and get into the game. Maybe we could just go to the next slide and then on to a Q&A. I just want to talk about, we have 3 products for investing, but I think, you know, as obvious from the webinar here, there are 4 ways I think we would like to talk about investing today. One of which is be an investor in HUD 8. I mean, I think being an investor in a miner, maybe Sue, we can get to this in the Q&A. It's a different investment case. I think there's a lot of additional factors that go into how a miner operates that makes it a great complement to just directly owning Bitcoin yourself. We've built the Bitcoin ETF EBIT for investors to hold directly in brokerage accounts. If you buy EBIT, it's in Canadian dollars, or EBIT.U if you're a US dollar investor. We also have built Ether for Ethereum investing, and ETC, which holds EBIT and Ether in their relative weights for the person who wants a single ticket. In all cases, these are direct cryptocurrency holdings. We are owning actual Bitcoin held at our custodian Gemini. Every dollar you put into the Bitcoin ETF EBIT is a dollar in Bitcoin. This is not using derivatives. We're not speculating in any way, shape, or form. We are always 100% deployed.
Yeah,
and that's right. And I think it's something that can be quite confusing out there, especially when people look at some of these derivatives-based ETFs that are in the US. There's a big difference between owning actual Bitcoin and owning a derivative of Bitcoin. And so when investors look at EBIT, this is own Bitcoin in your brokerage account. And the advantage of that, of course, you could go buy your own Bitcoin if you wanted to open an exchange, an account with a Bitcoin exchange, but this allows you to include it in your overall financial plan, working with your financial advisor and so forth, which we think is helpful.
It also takes away platform risk, as we've seen in the past couple of weeks with platforms like Voyager, Celsius, unfortunately going under, and it also takes away custody risk as well when you instead invest in this type of instrument.
Yeah, thank you. That's exactly right. And so none of our Bitcoin is loaned out. None of our Bitcoin is in anybody else's control except for in the property of the fund. And as I said, it's 100% invested at all times. And so, Sue, a question for you is, how are you seeing investors think about the opportunity to invest in a miner and invest in Bitcoin directly, and how are they thinking about those two things? Because they're obviously very much related, but you know, in the past quarter, for example, I think you're up 50%, whereas Bitcoin's only up about 18%. So there are times when it's definitely much better to be the miner, and we think both are great investments. But what are you hearing and what are you seeing out there?
For sure. I think certainly what we're hearing as of late is that, for example, with a company, with a miner like HUD 8, you're not just getting that exposure to Bitcoin upside, but you're also getting effectively $1 into HUD 8 is $1 that's being reinvested into the growth of this industry. So the growth of the Web3, the growth of the blockchain and the blockchain application services space is also what you're getting. So you're getting multiple avenues for upside and playing different lines of ancillary revenue, all related to not just Bitcoin and blockchain, but also just the growth and where the future of the web is going, which is decentralized systems, peer-to-peer lending. So yeah, that's certainly what we're hearing on that side.
Yeah, I think that's right. And I think also there are still some investors who are with investment dealers that are blocking Bitcoin ETFs. And so a publicly traded equity mining company like HUD 8 is a great option for getting exposure if you can't hold the digital asset yourself. But again, we think there's room for both, much like investing in gold during long-term bull runs in the gold industry. It pays to own gold, it pays to own the miners, it pays to own the infrastructure.
Yeah.
And certainly HUD 8 being one of the first ever Bitcoin infrastructure companies available to the public has been leading in that space. I do see a bunch of questions coming in here. While I look at those, I did have a question. I think maybe I can ask this, and perhaps others have as well. But could you talk, Sue, a little bit about the role of mining and Hut 8 in particular in the building out of green energy infrastructure? Because I think that this is an often misunderstood point, that in fact Bitcoin is promoting the transition to renewable energy.
Absolutely.
And maybe you could talk a little bit about that.
For sure. So one of the problems right now with renewable grid operators is the fact that they're still incredibly expensive to stand up, but also there's a problem with intermittency and demand and so when a renewable operator partners with a Bitcoin miner who is a 24/7 off-taker of demand, it can power down in periods of high demand for the renewable operator grid. Mining is actually a complement to renewables operators and a consistent sort of buyer of their energy that again can power down. There's also a really interesting portfolio manager out of New Zealand, an ESG portfolio manager by the name of Daniel Batten, that I would highly recommend everyone go. He's on Twitter. I believe you can also find him. I'm actually not sure the name of his portfolio of companies, or management portfolio, but his name's Daniel Batten. You can find him on Twitter. He's a New Zealand PM. He does very interesting research in terms of how mining can actually help reduce emissions, methane emissions by about 5.3%. So how is this possible? Right now, ConocoPhillips and ExxonMobil, they have two proof of concepts going by using Bitcoin miners to, instead of rerouting vented flare gas that otherwise would be vented into the atmosphere, actually rerouting it towards Bitcoin mining operations. If every fossil fuel emitter was actually using mining to instead reroute that vented flare gas, that could potentially reduce methane emissions by 5.3%. So it's very interesting how this technology is a complement to ESG, actually is solving for some real world environmental problems. And also, if you look at the total amount of energy that Bitcoin actually uses, there's something like 130,000 terawatt hours of energy that are used a year. Bitcoin consumes less than 1%. It's something like 0.14% that the total Bitcoin network uses in global energy production. So that's less than air conditioners in the US in the summer. That's less than gold mining. And again, let's go back to gold. Gold has what, an $11.2 trillion market cap versus Bitcoin is 412 billion. And Bitcoin uses much less energy than gold. Even, Christmas lights in the US, studies have shown actually use more energy than global Bitcoin mining production does. So a lot of this misinformation that we see in the media of, mining is bad for the environment and causing tremendous amounts of pollution, the data actually doesn't support those facts. So.
Yeah, and one comment I heard that really opened my eyes to this is I think there's a lot of misunderstanding about how the energy grid works, and I think the saying was an electron is not fungible, meaning that an energy plant in China, the electricity they produce there will not be able to charge your telephone in Toronto. You can't plug your iPhone into the wall in Toronto and get that electron. It does not work that way, and therefore you can't actually look at any of these like total global aggregates around Bitcoin energy use and say, oh, that energy that's being used would have been used for something else, and therefore it's a negative from the network. In fact, it's the opposite, which is that you can actually set up you can use Bitcoin mining to fund the new projects that come online in the parts of the network that need better investment, and it can be the first best customer for off-peak demand. Absolutely. To allow those projects to be financed, and that when you look at it in that way, which is obviously much more the reality of the situation, you see that the expansion of the Bitcoin network and the innovation of miners, I mean, the amount of CapEx that Hut 8 has put into energy over the course of your business is obviously been a huge amount of demand to the clean energy business that wouldn't have existed if it wasn't for Bitcoin mining, and that is net positive for the world, right? So it's about framing, and I think that there's a lot of media out there that does not do a good job of providing the proper context for how to think about energy use. Yeah. There are a couple of questions in the chat. There's one there's one or two for you, Sue, here. One question, I just, the window's closed, but I'll paraphrase what I think it said, was that how do you look at your balance sheet as it relates to hodling versus seeking financing for operations, and how do you manage that to be non-dilutive to shareholders?
Right. So as I mentioned in the presentation, this is not our first bear market, and we've actually learned from past bear markets the importance of taking a balance sheet first approach to everything that you do in your business, but also more importantly to preparing for the next bear market while you're still in a bull market. So what does that mean? It meant that we really prioritized building out ancillary lines of business revenue. So as I mentioned, this new data center business, and again, us moving into sort of being the bridge between Web 2 and Web 3, looking at things like how can we put our stack back to work once the market volatility abates. We were earning prior to the market volatility and the Terra Luna collapse about 2 to 2.5% on our 2,000 Bitcoin, on 2,000 of our inventory of 7,400 Bitcoin. Looking at things like, again, making sure that we're very mindful about when we deploy cash and how. So as per our last financials, we had about 78 million on the balance sheet. So all of this has really set us up in a position to weather this bear market. Also, it bears mentioning that the stack is also unencumbered, in the sense that last bear market, we actually were able to stay alive and thrive because we were able to take out a loan against the Bitcoin that we held on our balance sheet at that time. So agility, flexibility is really something that we've prioritized with our balance sheet in the last bull market, and that's how we're sort of staying afloat here in this bear.
There's a bit of a follow-on question here from Steve, who says, if Hut 8 is holding Bitcoins on their balance sheet, how do they play a role in increasing the total number of Bitcoins in the marketplace? Do you have a formula or strategy for when to sell some of your stack? And will transaction fees increase over time as a larger percentage of Hut 8 revenue?
Yeah, so transaction fees probably wouldn't be a large percentage of our revenue ever, I don't believe. But in terms of, how many new Bitcoins are we minting a day? It's about 10 Bitcoins per day right now. And look, we're very bullish on the upside price potential for this asset class. Again, if Bitcoin were to capture even 2 to 3% of gold's market cap, that is incredibly accretive to its sort of, price per Bitcoin price. And so, it's not going to be like we're going to hodl forever and ever, but yeah, if there's a way for us to continue to hang on to this Bitcoin on our balance sheet, build alternative lines of revenue, perhaps become one of the largest Lightning node operators and contribute to the network in that way, that's the priority. But I mean, again, if Bitcoin were to hit 144,000 per coin, or like Kathy Wood from ARK Investment said, $500,000 per coin, I mean, we'd certainly reevaluate our sell case and then reinvest that money potentially into the growth of our high performance compute Web3 infrastructure services space piece of our business. But yeah, for now, it's just hang on for dear life.
Maybe I could just add my perspective on this question about increasing the number of Bitcoins in the marketplace, because one of the things that fascinates me about Bitcoin is the fact that it's infinitely divisible, which means you can never run out. And so it's the only time I've ever seen an asset where there's a non-zero sum game to hoarding it, in the sense that you could have one Bitcoin left and still run the entire global financial system on that one that remains, because it can be subdivided. So if you think about a stock, right, when you have a publicly traded company, for there to be more shareholders, at some point you have to issue more stock, and that's dilutive. It's not that way with Bitcoin. You could get down to a single sat and just keep dividing it down. So for Hut 8 or your retirement account, or anybody else, Kathy Wood, for example, to be holding a lot of Bitcoin in an investment and not intending to sell for the next 20 years, that doesn't mean there's any less Bitcoin for everybody, or it doesn't mean that the opportunity for you to put your money into this asset and benefit from the digital scarcity is any less for the next person.
That's right.
One of the interesting things about Bitcoin, you talk to anybody, everybody feels late by the time they arrive, because they look back at the time that they wish they'd come in. And then anybody who's been in Bitcoin for 4 or 5 years feels like they came in very early, given where it has gone since then. And so the network can continue to expand without there being an increase in supply. You could actually have no more increase in supply today, and it doesn't change the opportunity for the new buyer tomorrow. It, of course, will be reflected in price, which is the benefit of everybody who's participating. The final question was just a question around performance versus gold versus NASDAQ, and how does Bitcoin relate to higher inflation and interest rates over time. I think, just an answer to this, we've seen in the past 18 months, Bitcoin has increasingly performed like a risk asset and is traded similarly to the large tech complex in the US equity market. To some degree, that probably has to do with the fact that it's been used in similar portfolios by large asset managers, and therefore, as one has sold off, the correlations have tightened up. That being said, as Sue pointed out, the correlation does not move in lockstep with gold moving up far less than Bitcoin on the CPI print last week. I believe we saw the same dynamic in the first month of the war in Europe, where even in the first 24 hours, gold caught a much harder bid than Bitcoin. By the end of the month, Bitcoin was a far better place to have been. And some of that came from the stories of the utility value of people who were using it as a way to get assets out of the country as they had to move. So we expect correlations to, the best way to think about correlations between different asset classes is to look at a much longer time frame. You can look at a 30-day look back if you're comparing Google to Apple, but I think if you're going to look at gold versus Bitcoin versus the NASDAQ, you need to look at a much longer time frame. And in that context, I think it's not debatable that Bitcoin has been the most uncorrelated asset that investors have had the access to over the past 10 years. And these days, it's easier than ever to participate with ETFs like ours and publicly traded mining companies.
I think, just really quickly to piggyback on what Elliot said, what's also very unique about this bear market for Bitcoin is that it is correlated to macroeconomic factors, versus the bear market in 2019 and late 2018 was really more focused around a loss of faith in the technology. But it is a completely different market now, and that's actually a real positive factor. The fact that we have sovereign nation wealth adoption, we have bipartisan U.S. support for a digital asset bill, the Cynthia Lummis-Gillibrand bill, the Visas, the MasterCards, the Amexes, all getting into this space, and now the fact that Bitcoin is fully correlated with risk assets actually is a good thing. It shows that it is here to stay. So that's what's a lot different about this bear market versus last bear market.
Yeah, I think that's exactly right. And there are other things, if you want to get away from cryptocurrencies, to look at as analogies here. Almost nobody today remembers that in the dot-com burst, Amazon shares fell by 93% from March of 1999 to September of the following year. That is something that is, in hindsight, the greatest buying opportunity in tech shares in our lifetimes. But at the time, people were saying, well, this internet thing is never going to work. Now, of course, nobody's saying that anymore. So certainly the community of people who believe that permissionless digital asset ownership and permissionless digital payments are only growing. And by the way, you can take somebody's opinion, or you can just look at the data in terms of Lightning adoption on the charts. You can see the opportunity in front of us. And so that's really, of course, what we're all quite excited about. With that, I think we should close off as we're coming up on the hour. If you would like more information on our ETFs, please do visit us at evolveetfs.com. We have all kinds of materials, newsletters, podcasts, webinars like this one, fact sheets and commentaries, and you can reach out to us through there as well. And also, of course, Sue, where can people find more information about Hut 8?
Yep, so hut8mining.com. We trade on the NASDAQ under ticker HUT, on the TSX under ticker HUT, and I am at Big Suey on Twitter, or Sue at hut8mining.com. Feel free to reach out anytime.
Well, thank you very much, Sue. I just saw a question pop up. How can I watch this again? A replay will be available on our website in the coming days. Also, subscribe to our Innovation Weekly newsletter. It comes in by email, and it'll be able to show you how to reach this as well. Thank you very much, everybody, for joining us today. Thank you, Sue. This has been an amazing conversation. Really enjoyed it. Look forward to doing this again. And everybody take care. I look forward to seeing you soon.
Thanks so much, everybody.